Okay, today we're visiting with Alan Ellman, and he is the principal and CEO of TheBlueCollarInvestor.com. And I found Alan online. I think I must have gotten some email with his information. It was really intrigued with the title, The Blue Collar Investor, because it sounded just like our kind of guy, and that is not the expert, which the industry of experts is nebulous and vast, and with great to not so great and everything in between. So that was a title that really caught my attention. And then I went online and saw his site, and I really liked on his video. You have a great promo video, by the way, Alan. It's really excellent.
Thank you.
I hope everyone will see it. In fact, we will provide links. And I know I'm going on before I introduce you, but what I love is your title, before I let you speak, but your title is Be CEO of Your Own Money. Not your title, but one of your slogans on the video. Be CEO of your own money. I love that, and sounds like a great place to start. So welcome, and tell us just a little bit about being CEO of your own money, or anything that you would like to start to introduce yourself, and then I'll go with more specific questions.
Sure. Well, being CEO of your own money means that you have an opportunity to evaluate how your money is invested. For most people, they work very, very hard, we all did, and handed over our money to some guy. And whoever that may be, it may be an absolutely wonderful financial advisor. That's something you need to determine. But whoever that person is somebody who does not care as much about our money as we do.
That's right.
That's the premise that I went on when I started teaching myself how to self-invest back in the early 1990s.
Okay, back in the early 1990s, and we're going to go there in a minute, but I just want to first then to flip back to your incredible and vast array of work that you put into the world. So you've authored 3 books on covered call writing and another general investment guide for students. You produced a 4-part DVD series based on stocks and options seminars, and you presented over 150 seminars. You've authored over 300 journals on your blog, which again, we'll put all the links to your blog. And we're, so here we are, and so much more. I mean, there's a vast array of credentials, but it's also very intriguing that this is not your original career. You started with an entirely different thing. And so we'd like to set the premise just a little bit more for our next chapter of conversation, because what we're about in particular at Best Boomers and Beyond, and that's something that you said was a message you really resonated to, is the concept that, first of all, these days, careers are not necessarily just one. We don't necessarily start something and do it for life. And so it's not that uncommon, but it is a little less common for people in the second half of life to gear up rather than wind down. And so many of us, though, as baby boomers, are finding that we are really discovering our passion and getting more fired up and excited about possibilities and potential and what we can do in our second half of life than our first. So we're at Best Boomers and Beyond. I'm LeAura Alderson, here with Alan Ellman of The Blue Collar Investor. And Alan, if you could start with, here we talk about age. We don't hesitate asking people's age, because that's kind of what we're about. So what year were you born?
I was born in 1947. I'm 67 years old.
Okay, amazing. Well, you look fantastic for 67. You really look fantastic. And but what is 67 anymore? And that's part of it too, isn't it? It's about living differently. 67 is the new 47, right? And that you could certainly pass for.
Well, LeAura, actually, I do a lot of the same things that you do. I'm into physical fitness. I actually was a certified personal trainer for a while. I used that knowledge basically to help myself and friends and family. I didn't use it as an occupation. But I go to the gym 6 days a week.
Wow.
I eat very healthy. Everything in my house is healthy.
Excellent.
So, that along with some good luck and some good genes can enhance the quality of your life as you go on. I never smoked, I never drank, so
absolutely
makes me a little strange. But those things all together with, as I said, you have to be a little lucky genetic-wise. But yeah, I feel like I have as much energy now as I did when I was in my 30s and 40s, and I work just as much.
Excellent. And I feel exactly the same way. And so let's go. I noticed that you had done a personal training certification as well, so I was excited to get into that. But could we start with what was like the biggest chunk of your career? And because you're a doctor, you're a dentist, right? So tell us about that.
Yes, well, I was always oriented in the math science direction growing up. I went to the Bronx High School of Science, which in New York is a specialized high school geared to science and math. City College, same thing. And so my strength always lied in those areas. And I kind of took the route of the health profession. And I always wanted to be a dentist. I'm not sure why, but that's something that even growing up, I remember when I was very young, was writing to the American Dental Association, and I wasn't one of those college students that changed paths like 4 or 5 times. I was on a straight track to dentistry, and I was fortunate enough to get accepted into New York University College of Dentistry, and I graduated from there and went into the military as a captain and as a dentist for 2 years. And for 36 years, I practiced dentistry, never really anticipating a career change. Kind of a door opened up a little bit for me as I was teaching myself how to self-invest and take control of my finances and become CEO of my own money. There was a little spark of interest from a group, and then the floodgates opened up after that. So the door opened up a little bit, and I just stepped right in and nurtured it, and it became an amazing new career and profession for me.
So are you practicing dentistry at all now?
No, actually, I had a dental practice in Suffolk County in New York, Middle Island, and I started that practice from scratch with my partner, Harvey Lindenbaum, who I met at NYU Dental School, and we started with 0 patients and a whole lot of school debt and a huge debt for opening our practice, and
Yeah.
zero patients. And we built that up to a very successful practice where we had 4 dentists working for us and a staff of 15. And I must say it was great for me and my family. I was able to give my 2 sons what I consider world-class educations. One is an attorney now for the stock market. The other one's a psychiatrist. So everything, I mean, I'm very, very grateful for the career that dentistry and what it meant to me and my family. So I did that for 36 years. And about 2 years before I left dentistry, I gave my partner notice. I realized that the Blue Collar Investor was going to, in fact, be a new career for me. I made that decision that I was going to move on, and I gave him a 2-year notice. And in June of 2013 was my last day that I held a drill, a syringe, did a root canal, extracted a tooth, whatever.
Wow.
So,
Wow.
I completely shut that door. Although, I do miss my partner, my staff, many patients that I knew for decades. I do miss them, but I have a new career now that I'm very grateful for, and it allows me to travel the country, meet folks every month in a different city, and extend every seminar I do into a mini vacation. So, how about that? 12
That's
vacations a year. How's that?
that you cannot beat that. That's
No.
amazing. And not only that, I mean, yours is a really fascinating story from the standpoint of not many of us are fortunate enough to be so focused on our specific direction so early and so young, and so many of us do get sidetracked in ways that you didn't. So it sounds like yours really was so much involved with numbers and science. It's like that. But let me just go back a minute to something you said about when you wrote a letter as a child or a young person to the Dentist Association or whatever. About how old were you?
I was probably about 10.
What did you say? What were you asking them?
I asked them, basically the process. How do I go to apply to school? What classes do I need to take? Things
Wow.
of that nature. And my mom was beaming. She was so happy I was going to be a
Yeah.
dentist, or at least I was going to try to be a dentist. So she was so happy. In those days, if you recall, the doctors used to go around house to house with a little black bag.
Yeah.
Well, my parents didn't want me to do that. So the best thing in the healthcare profession was dentistry in their eyes. And I was, like I said, always geared in math and science. And I just thought it would be a wonderful profession. People respected dentists. I knew I could make a good living out of it. I was my own boss. And so it appealed to me in that regard.
But I mean, it's just we look for videos these days to share with our family and our kids, and other people to inspire them about young people who were, as you described, you were, and that, to be so focused and even thinking about your career and your future at 10, let alone taking action toward it. I mean, that's an amazing, to me, an indication of a powerful soul who's here to do some great work in the world. So, congratulations on that.
Well, thanks. I also played stickball and football.
Of course. Thank goodness.
I was kind of focused in a lot of directions.
Yeah, well, thank goodness for balance. But you're a man on purpose, is what I would think I could describe you as. You're a man on purpose, because the other thing that's unusual about your career path you just described is so many people reach sort of a crisis of meaning, and not to say that you may or may not have in your life, but when it comes to their career. And for you, it seems like you just really flowed. Your life flowed from one area of interest to another naturally. You didn't have to wrangle about deciding what you wanted to do next and whether you wanted to, find your next great career. In a way, it sounds like it found you through your natural inclination to inquire. So take me to the point where you decided to be the CEO of your own money versus handing it over to the financial institution to manage.
I think it started when I was a child, and I was watching my parents every so often get a phone call from their broker who would say to them, buy IBM, or sell GM, and there were no questions asked. They just went ahead and did it, and then they followed in the papers, and I'd hear them talking, oh, IBM went down a half a point or this or that. And I always remember thinking to myself, why does somebody else make that decision? My parents are pretty smart. My father was a very hard worker. And why does somebody else get to make those decisions? Is he really making the best decisions for them? I remember thinking that briefly and then running off to the schoolyard to play stickball. But it did pass through my mind. And then going through college and then dental school and working, pretty hard those years to achieve what I was hoping to achieve. And then starting to work also very hard, raising two sons. I felt like, wouldn't it be nice if I could generate income streams without having to go to work? Wouldn't it be nice if I could say to my money, you guys go to work today, I'm staying home?
So did you think of that on your own, or did you read other people's material that advised that or put that thought into your head?
Well, you know what? I'm going to answer you by saying I think I thought of it on my own, but I'm sure that there was some influence by things that I learned by reading and watching and hearing and things of that nature. But I did decide, it was the early 90s, I said to myself, I am going to learn how to self-invest in the stock market and in the real estate market. I made a commitment to both aspects of investing, stocks and real estate. So what I did was every week I went to a bookstore. In those days, bookstores were in fact open. And I would buy one book on investing every week. I would make sure I got through it by the end of the week. And the next week I went and got another book. And all the while, I always had a pen in hand, a paper in front of me, because as I said, I was fortunate to have a little bit of a knack for math. And I always said to myself, you know what? I'm going to see if I could figure out formulas to beat the market. So whenever I wrote a book and I had an idea, I'd write it down. And I started compiling pages and pages of notes that were a little bit different from traditional investing. And I started actually investing my real money. And I was finding that every year in the stock market, I started with the stock market and I did real estate later on. I could tell you how real estate actually was the impetus for my new career, even though it's now in the stock market. I'll tell you that in a moment. But I started writing these formulas down. I was beating the market every year, not by a huge amount, 1%, 2%, but the consistency that I was beating the market is what I thought was meaningful. So what I did was I told some friends and relatives about my success and what I was doing, some of the formulas that I had drawn up, and they just didn't seem interested. So I said, you know what? Probably most people aren't interested in the way I want to do things, which is basically taking control. So I just kept doing it for myself. And then a couple of years later, I came across the strategy, which is what I am now well known for, which is a combination of using stocks and stock options. Now, most people think that's way too risky for the average person. That's a myth. I can tell you that right now. It's a very conservative strategy. But in any case, I started doing that, and then my success got even greater. And so I was doing very well using stocks and stock options. but only keeping it to myself because nobody seemed interested. Then what happened was I started to say, okay, I have these income streams coming in now. Dentistry's been very good to me. The stock market is being very good to me. I still have a son in law school. I had a son in doing his residency in medical school. I still need money. So maybe I could develop another income stream. I did the same blueprint, reading books, taking seminars on real estate. And then in 2006, I started buying properties. Florida, Pennsylvania, Texas, New York.
What kind of properties, Alan?
I believe in diversifying. So I bought both residential and commercial properties in like 4 different states. And in a short period of time, I bought up like 9 properties. And I also had my office building in Middle Island, which I own with my partner,
Yes.
and my home. So I had this like, whoa, what's this guy from the Bronx owning all these properties for? But I figured out how to do it and had to get mortgages. At that time, it was easy to get mortgages before the recession of 2008. And I made sure that the properties would always positively cash flow. In any case, I was doing pretty well with that. And had there not been the recession of 2008, I put myself in a position to become a multimillionaire in a very short period of time with those properties. But of course, that plan didn't work out because of the recession of 2008. However, doing the real estate is what caused me to end up with a new career. And here's how. This wonderful woman who's become a friend of mine, her name is Barbara Carnes, she owned a real estate club on Long Island. And somehow she got wind of the fact that I was doing these deals down in Austin, Texas. The gist of it is that I bought a co-op for my son when he started law school at Brooklyn Law, and I took that co-op after he graduated, and I converted it into 5 properties in Austin, Texas, without taking a penny out of my savings account. Right, so that's the overview of the real estate seminar that she wanted me to do. Alan, would you be willing to come down there? We have about 250 real estate investors that would be interested in hearing what you did down in Texas. I had never done a seminar before, but I also never really had a fear of speaking in front of people. So I said, sure. So I kind of fumbled my way through my first PowerPoint. I didn't really know how to do it in those days. Now I could do it with my eyes closed. But I made up this PowerPoint on these great real estate moves I made, 1031 exchanges, refinances, all the stuff that I had learned by reading the books. And I showed how I took no money out of my pocket, and all of a sudden I have 5 properties down in Austin, Texas. Okay, so I go through my seminar, and during the seminar, LeAura, I came up with one sentence that was about to change my life. And here it is. I said during that seminar that I purchased my first real estate property with the cash that I earned from selling stock options.
Ah.
And then I went on to complete my real estate seminar. Well, after the seminar was over, everyone's inundating me with, how did you do that stock option thing? And then I get emails and phone calls. And I'm saying to my wife, Linda, you know, I thought I did a pretty nice real estate set. All they're asking about. So after a while, I said, you know, maybe I should just write a seminar explaining how I do this. So I wrote this basic seminar. I invited the people that attended the real estate meeting, and I rented a room at the Holiday Inn, sold out. It was standing room only. Then I wrote 3 more advanced seminars, sold out. And that was the impetus ultimately to writing my first book, Cashing In on Covered Calls, which much to my shock became the #1 selling book on Amazon.com on covered call writing, the strategy that I used, after 3 months of its publication. And I've held that slot now for 7 years.
Wow.
Just getting my 5th book out this week.
Congratulations. That's
Thanks.
fantastic.
So it wasn't my stock investing that got me into this business. It was actually that real estate seminar and that one sentence that opened that door a little bit, and then I just flew right in.
You know, what I'm hearing in your story is one of the things that we often talk about in our Best Boomers and Beyond articles, as well as just amongst my family and associates. And that's the concept that you were just walking through each open door of opportunity, pursuing your interests. You know, you didn't start out when you were planning to be a dentist to even be a real estate investor, and you didn't start out then when you were real estate investing to do stocks. It's just all of those things happen naturally. And I think that many people wonder and that aren't as necessarily directed toward a specific endeavor, you know, try and figure it out and work too hard trying to figure things out. But it really begins by reading and educating ourselves in our areas of interest and beginning to embark in that direction in activities and seminars and education. And each of those leads to something else. It grows into something bigger.
Yeah, well, I never really, you're 100% right on that, LeAura. I never really focused in on starting a new career in giving seminars and writing books on investing. That wasn't my game plan. However, I did have a plan where I would take control of my finances. That was definitely in my plan. It was a heavy focus of my plan. And I said to myself, you know, I kind of feel that our education system let us down a little bit. At least it did in the days when I was in school, because ingrained in the fabric of our education system is kind of this little bird saying to us, you're not qualified to invest on it for yourself.
Right.
Because they don't really teach that, or they didn't teach that. That's the reason I wrote my fourth book on stock investing for students. They don't teach it. So I graduated. I had taken all these upper level advanced calculus classes, organic chemistry, all these really esoteric, involved, detailed classes. I didn't even know what a stock was. I didn't even know how to balance a check.
Isn't that amazing? It's just astonishing, and it's really backwards, isn't it? It's upside down.
I think so, because there's other material that's so much more important to know while you're going to, and to learn while you're going to school. But I always said to myself, you know, why can't I do that? I mean, I don't consider myself smarter than other people, but at least as smart, you know, as people that are managing money. Why can't I do that too?
And
and who else, you know, this was my other thought. Sorry for interrupting. My other thought was, who cares more about our money than we do?
Right.
You know, maybe our kids. But other than that, nobody cares more. Nobody's going to dedicate the time and the attention to our own money like we will.
That's right. And you touch on so many points that we're passionate about in my family. And I keep saying my family, but we're entrepreneurs. My husband and I both have different entrepreneurial endeavors. And as does my daughter, who's 19, running her own marketing business and has been for the past 5 years. She started when she was 15. It was part of her homeschooling project. And it was because of the things that we were passionate about learning. We're autodidactic, polymaths, basically interested in a lot of different subjects, and also teaching and always teaching ourselves, a lot of self-education. Obviously, you didn't want to teach yourself how to be a dentist, and you got educated in the traditional channels. But what's important for the audience, I think, about what you were sharing and what we're talking about now is that we can teach ourselves in today's environment, especially with the worldwide wisdom at our fingertips and knowledge of everything. We can teach ourselves anything that we're interested in doing, and there's nothing to stop us and no barriers. So you mentioned earlier that you were good at math and numbers, and so some people might be thinking that, well, you see, Alan, you're good at math and numbers, that's why you could do the stocks and options and understand it. But having viewed some of your videos and read your article that you've written, which we'll be posting with this video, it's clear that you also have a talent for chunking it down in simple terms for the rest of us, and helping people understand that you don't have to be brilliant in numbers to make this work.
No, absolutely not. As a matter of fact, when I do my seminars, LeAura, I say to the audience, listen, I'm not any smarter than you are. I've just been doing this longer.
Exactly.
And if I could change a couple of lives, and I have, I have books this thick, testimonials of people that didn't know what a stock was, and now they're using terms like MACD histogram, exponential moving average. So it's very intimidating. It was for me too when I started. And I remember I was more intimidated with the options aspect when I started teaching that to myself. And I remember even after having invested in the stock market for many years, and when I first started getting involved in options, and I was making my first options trade online, and I educated myself. I knew I was doing the right thing. and I was about to execute my first trade, and my finger got stuck in midair. I got so scared to actually execute that trade. And of course I did, and now I execute trades. There's like smoke coming out of my computer. I'm surprised my next door neighbor doesn't call the fire department. I'm doing so many at one time. But it's a matter of gaining confidence in what you're doing. And it's getting past that intimidation. And that's the way I wrote my books, so that average retail investors like myself can understand. So I wrote the books the way I would have wanted them written when I first started teaching myself these strategies.
That's it. And education is just really, that's the key that unlocks any door. And so that's what you've created to help people learn how to do what you taught yourself to do. So I think that is such a great service. And it really is important. My husband and I have been on that journey. I mentioned to you that my husband is actually, my daughter, husband, and I all attended an investment seminar, and before we knew about yours. And we really enjoyed it. We decided as a team, as a family team, that he had more time at that point to dedicate to learning the systems than we did, because as the saying goes in that investment strategy, the recommendation was to go an inch wide and a mile deep, relative to, being in order not to lose money, and so basically that involves, like you said, accessing information that's readily available on the internet, and that is, what's the health of the company that you're interested in, or what kind of companies you're interested in, and investigate those and start there. So he's doing that. I know you guys would have a lot more to talk about relative to the investments, but we're all on board with learning how to be stewards of our own money, and really it's sort of backwards that we were not taught to do it that way, as we said earlier. So I think, though, that people like you are putting a correction in that system, people who are teaching financial intelligence, because even things like, maybe you could speak to this just a little bit, it's an area that you cover in your programs, and that's the concept of how little actual profit, net profit, most people enjoy from their managed funds. Can you talk about that?
Yeah, sure. Actually, that's a very, very important point that you just brought up. I'm glad you brought it up. Most people that use financial advisors, and let me premise my remarks by saying that I am not telling people not to use a financial advisor. Not everybody wants to be in control of their finances. But what I am saying is that you should know enough to be able to evaluate the type of job that financial advisor is doing for you. We all go out and we work very, very hard for our money. And then if we're going to turn it over to somebody, we need to know whether or not they're doing the right job for us. So let me give you and your listeners a quick example of one easy thing that you could do to evaluate that, because I just did this for a family member of mine. There are a lot of free websites out there where you could chart the price of a stock versus the market, which is the S&P 500, the 500 largest companies, corporations that trade on U.S. exchanges. And that's usually considered the market. So you could go to a free website, and your members can email me and I'll tell them where to go for this, and put in SPX for the S&P 500, and then put in the symbols for whatever mutual funds they have that their financial advisors have put in their portfolios, right? Now, the ensuing chart will have lines of different colors, each color representing a specific mutual fund. Well, if that fund is below the line of the S&P 500, it's underperforming the market. So here's what that means. Number one, you are paying somebody to underperform the market, okay? Number two, most of the funds that you're in are actively managed funds, which means that there's somebody there that's making decisions about buying and selling securities in that fund. Well, whoever that person is and that team is, they expect to get paid for their time. So there's what's called an expense ratio that you're also paying. It's kind of hidden, but it's there. And then a lot of these mutual funds have, this is hardly anybody knows about this, what's called 12B1 fees, which are like fees that they use for advertising, things of that nature. That's snuck in there too. So you are paying to have a mutual fund that has a very high expense ratio, maybe up to 2%, plus you're paying a financial advisor to what? Underperform the market? Well, here's what you can do instead. You could buy, and there are several of these out there, very low expense ratio index funds based on broad market, like the S&P 500 or the total stock market. Like a family of funds like Vanguard or Schwab would have these. They'll outperform 75% of the actively managed funds. You could do that yourself. You don't have to pay anybody to do it. And chances are you're going to do way better than that what the financial advisor is doing, who is getting you involved in actively managed funds. It kind of means more money for them. Now, again, let me say, there are some very, very good financial advisors out there. Those are the ones you want if you're not going to do this yourself. But in order to know whether or not your advisor is doing right by you, you need to be educated. And that's my point to anybody and everybody that'll listen. Educate yourself and evaluate. The relative of mine had about 20 different funds, on average, underperforming the market by about 5% a year.
Underperforming. And that does not include, so it's already underperforming, and then you deduct from that the fees, the 2 layers or so of fees that you mentioned.
Yeah, you deduct what he's paying his financial advisor. Now, I said to him, if you just went into a broad market index fund, instead of paying 1.7% expense ratio, you're going to pay 0.05%. And that fund is outperforming almost maybe 16 of the 20 funds you already have.
So in that case, that person like a Vanguard, or what did you mention, another one of the
Schwab.
In that case, those are available to anyone. They could do it through a Scottrade account or whatever, which I think it only used to be $7 per trade. I don't know if it is now.
Well, if you're going to use a Vanguard or a Schwab, you need to use Vanguard or Schwab.
Okay.
Yeah. But a lot of these companies that have their own mutual funds don't even charge when you're executing trades. And you can actually automate it too. You could set up like where every month X amount of dollars is taken out of your checking account and moved into the fund. I told my sons to set it up that way when they were younger. And, one of my sons said to me the other day, Dad, you know how much money I have in that Vanguard account? And it was just dollar cost averaging, automatic withdrawal. You don't have to do anything. Mutual funds can be purchased fractionally. So you could say to yourself, I'm putting in $100 a month, $1,000, whatever the number is. I believe you should base it on 10% of your gross annual income. And then it's automated. It just goes in. And
right.
You're dollar cost averaging. So, when the market goes down, you're actually buying more shares.
Right. Okay, so in my ignorance, I thought that I would need to go through a broker like a Scottrade, where you do it yourself, to buy the Vanguard or Fidelity or Schwab, I think is what you said. So that's not the case. So walk us through that to the listeners.
Well, you could go, if you're going to, let's say, go to Vanguard, you just go to Vanguard.com, and you go to the mutual fund section, and if you want to do it the way I wrote it in my student book, you would look to do a broad market index fund. So if you have one share of their S&P 500 mutual fund, you basically own a piece of 500 different companies, most of them blue chip companies like IBM, right? Now, they're going to ask you certain questions. What do you do with dividends? Because these companies give dividends. Well, you reinvest them.
Right.
So you may have bought you're owning more shares of the mutual fund as time goes on, in addition, hopefully, to having appreciation.
Right, compounding.
And you could set it up with, like I said, directly with your checking account, so you don't have to think about it, and you'll get statements electronically or paper statements, whatever you prefer. It's very, very easy. And so, yeah, Vanguard funds have to be purchased through Vanguard, Schwab funds through Schwab. But then there are things like ETFs, exchange-traded funds, which are mutual funds that behave like stocks, and those you could purchase through any brokers.
Okay, and we're not saying that this is what you should do and it'll work, but we're saying these are some of the things that could be successful You know, in other words, I'm not qualified, I should say, to give financial advice, but we're sharing strategies that work that many people that are generally safe for people to do on their own. Would you, or what would you say to that?
I would say that's accurate. When I say things like broad market, low expense ratio, index funds, I don't think there are any financial advisors out there that'll say, "What is this guy out of his mind?"
Yeah.
You know, they would have to agree that that's a sensible. It's for conservative investors. I consider myself a very conservative investor, even though I use stock options. Once people learn how I use it, they'll realize how conservative I am. Um, and then using a low expense ratio mutual fund like these Vanguard funds or the Schwab funds, dollar cost averaging. I mean, these are, like I said, this is not rocket science. We do not need Albert Einstein here to help us along. This is just basic stuff. And it amazed me that so many people don't really know how to do this, but how easy it is to transform what they're doing now, which is probably nothing, into a way of building up a large financial empire if you start young enough. I like to see people starting at around the age of 18 and investing 10% of your gross annual income, whatever it is. So I say to people, well, if you're earning 10,000, make believe you're earning 9,000 a year. Yeah. And if you're earning 100,000, make believe you're earning 90,000 a year. Work within that framework. Don't tell me what you can't do. Tell me what you can do and how you're going to do it. Exactly. And then automatically just put it in. You know, let it come out of your checking account into these mutual funds. And then once your account reaches a certain amount, you want to bring your returns up even higher. Then you move into individual stocks. By that time, you'll have more confidence. And of course, we're not talking to the boomers now. We're talking to their children and grandchildren. But certainly they could move money into broad market index funds very easily, like my family member who was 62, and he just took all those 20 mutual funds and moved it into a fund that's going to give him better returns.
So when you say we're not talking to boomers, but of course their children or grandchildren, so can you elaborate on why some of that strategy wouldn't work as well for boomers?
Well, what I'm talking about now is, let me just give you a very brief idea on my student book, the premise of my student book, and then we'll get into and then I'll show you why that doesn't apply to boomers. It has all to do with the power of compounding your money. So you know this expression, a dollar earned today is worth more than a dollar earned tomorrow. So the most valuable dollar you're going to invest is the dollar that you invest today. So if you start investing at the age of 18, that could be changed to 25, 35, 45. But the younger you start investing, the more money you're going to have 30, 40 years down the road. Now, in my book, I have a hypothetical scenario that I work with. Here it is. You're starting at the age of 18. You're investing 10% of your gross annual income. In the first 20 years of this 40-year plan, you're averaging $60,000 gross annual income. In the second 20 years, you're averaging $80,000 gross annual income. Okay, those are the numbers I made up in my book because I thought that it would have broad application. Using an 8% return on your money based on the stock market return, conservative return, it's 8 to 10%. I use the 8% figure. Compounding your money, at the age of 58, you will have $1.8 million. And how many people do we all know that are now boomers that are wondering how they're going to make it now if they retire?
Absolutely. And so it's the compounding that is the key that offsets the inflation and the taxes, because the 8% is not a big number when you take into account real inflation and taxes, right? Except where that picks up speed is the compounding. Is that right?
The compounding is, I and many others have called it the eighth wonder of the world. So if you there's something called the rule of 72. So if you take what your annualized return is and divide it into the number 72, that's how long it'll take you to double your money, and that's only with the power of compounding. But if you can enhance your returns, like I do personally, and thousands of others that follow what I do using stocks and stock options, then your annualized returns will increase even more. I just wanted to use a very conservative number, and historically 8% is a very conservative number for the stock market.
This is something, these are such interesting and important topics, and when you were talking earlier about how people in your family didn't seem interested in it, and when my husband started the journey of learning and educating ourselves on financial things, and how to leverage debt, because we're in a debt-based society now. It's no longer, money doesn't work the way it did in the time of our grandparents and parents who paid off everything and set money away in the bank account to earn interest. It just doesn't work that way anymore, which is all the more reason why people need to become the CEO of their own money. But it has been surprising, because it's been very interesting to me, and I'm not at all a numbers person. It's been surprising to me how few people have been interested in learning about it, or and I think a lot of it has to do with the assumption many people have that they're not good with math and that they're not going to understand it. But being not good at math and thinking I couldn't understand it, what I discover is when things are shared and broken down into principles that you can understand. For instance, the concept when I was first learning about 401ks, I used to work for Nabisco years ago, and we had these great plans, and they were, all this was very new to me, and I didn't understand. Everybody thinks that deferred taxes is the way to go, but would you rather be taxed on the seed or the harvest? That's a concept that we're not taught in school, that we should be taught in school. Most people just think, oh, definitely I don't want to pay taxes right now. They don't understand the process of when it is you're forced to take taxes by the time you're 65, at a time when you're probably your highest tax rate, and your lowest earning rate is the time that you don't need to be doing that. So these are important things, and we can all access it and manage it in small ways and small steps, like what you described, one step at a time.
Yeah, I think it's important for people to understand that although it is very intimidating to manage money and to invest money, and of course the stock market, it scares people to death because there are times when the market does go down dramatically. But if you have a definite plan where you could base your decisions non-emotionally, based on sound fundamental, technical, and common sense principles, then you are set. Because if you look at the market historically, the market goes up, and corporations are worth more. They're making more money. If you read, I read all of the reports, the economic reports that come out. I know it's terribly boring to most people, but what I do is I summarize it for our members at the end of my weekly blog article, so they could look at it in a couple of minutes. But that gives me a sense of what's going on in our economy. And then you have to, of course, factor in now the global economy. So a lot of that is very intimidating. But if you go historically, based on historical statistics, what else are you going to go on? You can't go on what you think is going to happen. You go on what's happened in the past, and then you have a plan that if trades turn against you, what you could do. If A happens, then B. That's, I think, one of the reasons why my books have been so successful, because I always have a lot in the book on position management, exit strategies, and things of that nature. So you buy a stock that has great fundamentals, earnings and revenues, that has a great price chart, that has a history of splitting with dividends, everything going for it, and it goes down in price. How could that be? But it happens. Well, then what do? What you don't do is curl up into the fetal position and feel sorry for yourself.
Yeah.
Or you shouldn't look at a deer like a deer in headlights. You should have a definite plan what to do. If you have that plan in place, you go, okay, this trade turns against me, I'm going to do A, and if that doesn't work, then I'm going to do B. And again, I understand, I see it time and time again. It's very intimidating to so many people. But if you don't make the move to take control of your financial future, then you're leaving it in the hands of somebody else who does not care as much about your money, your family, and your future as you do. I don't think anyone can argue that point.
No, that's absolutely right. And though the intimidation factor dwindles with every page that you read or every seminar that you attend toward expanding your knowledge on the topic. Really, intimidation is just not knowing, and educating is knowing. That is just each step toward knowing.
Yeah, I think that's one of the reasons why I think what you're doing here with your site is such a wonderful thing, because boomers can come to your site and they can get information from me and many others, and then factor in what they think will work best for them.
That's right.
Because there is no one strategy or approach that's right for everybody. And I tell folks all the time that I'm happy to share with you what I'm doing and why, but that doesn't mean it's right for you. But certainly anybody that learns what I'm doing and why, they'll be able to take that information and apply it in so many other areas.
Right.
So it's, like you said before, the key is education. That's power.
Right.
And that's what's going to make you CEO of your own money.
That's right. So Alan, you, at this point, when you began to, at that real estate meeting, when those guys started coming up to you and you began to embark down that educational journey of being a teacher, basically, you hadn't done that yet. And yet, it's as if you found yet another calling, not just an interest, but a calling. So what have you found that you have really enjoyed the role of teacher?
But that's an interesting question, LeAura, because I always kind of felt like I wanted to be a teacher. I enjoyed it when my sons were growing up. I was always the one who coached the baseball teams and managed, and soccer and everything. Matter of fact, when they both told me they wanted to play soccer, I'm a kid from the Bronx. I knew stickball, basketball, football. What's with soccer? So I did the same blueprint I used for stocks and real estate. I bought books, I took seminars, ultimately got a certification as a soccer referee. Never used it as a job, but I knew enough where I could coach their teams and give them, a good experience while they're learning. So, I felt like I wanted to be a teacher in some way. And to answer your question, I am having the absolute time of my life. I can't believe I'm getting paid to do this. I travel with Linda every month to a different city. We're booked up through the end of next year. Every time we go for a seminar, we expand it out into a mini vacation.
Yay.
I've met so many wonderful people all over the country. And, I tell my ex-partner from the dental practice, Harvey, I said to him, imagine if people paid you to go fishing.
Yeah.
That's his passion. That's what's happening. I'm getting paid to go fishing. Yeah. So, it was a little bit nerve-wracking to walk away from a lucrative dental practice that I had built up over 3 decades. It was a little bit nerve-wracking, but I said to myself, you know what? I could see this is going to be successful. I'm doing it. This is my time now. Now I'm doing what I want to do.
Excellent.
And I love every minute of it.
That's amazing, and that's fantastic. And what a legacy. Because now your sons can see you doing that and living this kind of life. So there's so many ways and places that your choice to pursue your interests and then share that with others is able to touch lives. It's like you were saying, to see people's lives transformed, and their interests awakened. And it doesn't just touch them in their life, but it touches their children. It touches their friends and relatives who become interested as well. And the same for you. So now your son's paths in life are totally different, not just because they have financial knowledge, but because they also have a role model in their life who's pursuing his passion and interest. And, what wonderful precedent that is.
Yeah, I'm very fortunate with my 2 sons. Matter of fact, Dad is not the smartest of the 3. I'm number 3 in that regard. But one son took the path of real estate. He's the psychiatrist, and he has more investment properties at his age than I did. And my other son, who's the attorney, has taken the stock path. So, they each took a path that they saw their dad taking himself. They just did it much earlier in life. And as a result, things are going well for them career-wise and financially. And, as a parent, I'm sure you know this, or your listeners know this, you never stop worrying about your kids no matter how old they are. And so you're somebody once said you're only as happy as your least happy child. And so far my sons are very happy, and that makes me very happy too.
Excellent. Well, so where are you based?
I live in New York on Long Island, Plainview, Long Island, and about 30 minutes outside of New York City.
And where are you? I'm sorry, go ahead.
My sons, one lives in Philadelphia. He went to medical school at the University of Pennsylvania, and he stayed in that area, which was very fortunate because he met his future wife there. My daughter-in-law, I couldn't ask for a nicer, better daughter-in-law and mother of my 2 grandsons. And so I travel to Philadelphia, my home away from home, every 2 weeks. So we're there every 2 weeks. And my other son, who's an attorney for the New York Stock Exchange, is living in Hoboken, which is just a ferry ride across to Wall Street. But he had a job offer in San Diego, and it was an offer that he couldn't turn down. So he'll be moving to the other side of the country in January.
Well, it'll be harder not seeing him quite as often, but it'll be wonderful visiting sunny San Diego, especially in the wintertime.
That's right. I told him, just make sure your house is large enough to accommodate the 2 of us. And then he said to me, Dad, I'm going to pay for your plane tickets coming across the country. And I said to him, that is not happening. That is not happening.
Well, unfortunately, you're both in situations where it doesn't matter really who pays, because you can both afford it from the planning and investing that you're doing and the life plan that you've set forth. So where are your next events? And we'll post those also, the link to your events page, but just share with us where you'll be traveling to next.
Sure. I'm going to be in Phoenix, the Phoenix area on January 9th and 10th. I have 3 seminars there.
See, that's smart, going to Phoenix in January. That's really smart.
I was very fortunate to get invited at the right time of the year. I think 1 is in Tempe and 2 are in another city near Phoenix. I can't recall right now. I'll be in Orlando in February, and New York City the end of February into March. So I'm booked through the whole year. If your listeners go to my website, TheBlueCollarInvestor.com, on the blog page on the top right, there's an events link, and they can click on that events link, and it'll show all the places I'm going to be. I'd love to meet, your listeners, and I spend about an hour to 2 hours presenting my seminars, and my focus is on giving them meaningful material and also getting to meet so many great people all across the country.
Excellent. Well, we really look forward to. Like I said, we're going to be posting. You've shared with us a wonderful article on options trading that really talks people through, the simple steps and sort of demystifies it a bit, and what the work that you're doing, because you're not a blue collar guy really, and you're a doctor. So I think it's interesting that you chose the name The Blue Collar Investor. How did you decide on that?
It just kind of came to me, but like I said, I'm just a boy from the Bronx, and although I did have the title doctor, I never really looked at myself in a different way. I was still that boy from the Bronx. My father was a hardworking man. He owned a little lamp factory, so our roots were all blue collar. And although I did achieve doctor status, it just never really changed me. And so when I formed the business, I knew that I needed to focus in on the retail investor. That's, the people that have a lot of money, white collar investors, they don't need me. They have their own way of making money. Money makes money. But my focus was going to be on the average hardworking blue collar worker. And so the name just came to me, Blue Collar Investor. And I hear it over and over again. What a great name for a company.
Yeah.
So I guess I did one thing right there.
You did many things right. You've done many things right. And you're really an inspiration. So you said that, we're beginning to close here, but I just wanted to capture, sort of re-emphasize one of the things that you said, that how wonderful and charged up and fired up you are about your life and now. What do you think? So some people go in the other direction. They think of getting older, and when they reach 50 or 50s, is sort of winding down. And what I think about at 55 now, that wow, I have 50 more years at least, to produce and do meaningful things in the world. And I'm so excited, and I see so many things to do. And my idea books are stacked this high. So I'm always fired up, but meet people who can't quite seem to get motivated. You don't sound like someone who's ever had a problem with motivation. But how could you help others who might be?
Well, I feel that to have a good quality of life later on in life, once you pass middle age, I think you need to do 2 forms of exercise. And I'm preaching to the choir now here. But I think you need to do physical exercise of some form or another. I don't think anybody can dispute that. But I also think you need to do mental exercise. You need to exercise your brain. Now, when I'm writing books, writing articles, giving seminars, I'm exercising my brain. And granted, I'm having a good time doing it. But right now, I have to say that I feel as good or better than I did when I was 30 or 35, working a lot of hours. My first son was born when I was 24, and my second son was born when I was 29. So I had two sons at the age of 30 when I started my dental practice. And I was working ridiculous hours in those days. And so between the hard work and having a second son who was very difficult at the time, it wore me down. And so right now, people say, well, congratulations on your retirement. And I kind of laugh at that. And I tell them, my average day, I'm putting in 6 to 10 hours. And
Yeah.
some weeks it's 7 days. But it's not because I have to. It's because I love to do it.
That's
And
right.
if I'm going to Philadelphia, I don't do anything that day. If I'm taking a cruise, we got back from a 17-day cruise in the Mediterranean. I have other people that work for me that are doing that kind of work. So I don't have to work, but I love what I do, so I do work. So
Excellent.
I tell people, make sure you have your physical and your mental exercise. Find something that you enjoy doing, because you're more likely to continue doing it if you enjoy it. Find your passion and stick with it. I don't mean to get philosophical here, and
No, please do.
I don't really mean to tell people what to do, because who am I to do that? But I'm happy to share with others what I've done, what's worked well for me, and perhaps that might work well for some of the members of your listening audience as well.
Definitely, that sounds excellent. I'm glad you brought the physical component back up again, because just to mention that I'm also founder of the site mytrainerfitness.com, and today we're actually relaunching our site from a product-specific site of the My Trainer Fitness product line to an aggregate site that is a sort of umbrella site of all fitness topics. And one of the things that I found in working with people and coaching and mentoring people and working in the physical fitness industry, as well as healing myself through physical fitness, reversing chronic back pain, reversing the osteopenia, the early precursor to osteoporosis, is that fitness just begins to heal the physical. Fitness really then can be so applicable to emotional and mental healing as well. So when you were talking, and the other part of that is like the fitness for the mind is learning and growth. Fitness for the emotions is not only pursuing our passions, but also sometimes doing the things that we're afraid of doing. It's like Tony Robbins says, when we, most of the time on the other side of our fears is our greatest victory. And so when you were talking about being a little concerned at the time about leaving your safe dentistry practice for this new endeavor, what came to mind was the concept of a skydiver. Someone jumping out of an airplane. Why leave a perfectly safe airplane? And yet people do it all the time, because skydiving is so exhilarating and fantastic, and it really feeds that adventurous aspect of ourselves. We're wired for change and variety and adventure as human beings, and if we aren't moving and learning and growing, we're not wired to be stagnant. That's not just that's a stasis that doesn't breed sort of hope and motivation and energy. So exactly what you're doing is you cover all those bases. So I really appreciate your sharing your story. You're sharing your article, and then getting to spend this time with you and get to know you. I'm glad I ran into you on the internet. I hope we could do another one at another time.
I'd be happy to.
Is there anything else you'd like to say before we close?
Well, I would like, first of all, thank you for inviting me for this interview very much. I think your site is a wonderful site. It's inspirational, and I think you're going to help a lot of people with it. And I'm happy to share my story on your site as well. As I said, I travel the country. If any of your listeners would like to come meet me in person, please do. Visit my website, TheBlueCollarInvestor.com. Check the events link on the blog page. And if you live in the area, come by and say hello to me.
Awesome.
And if any of your listeners also want to email me directly with any questions about anything we discussed, I answer all my emails. It's Alan, ALAN, at TheBlueCollarInvestor.com.
Excellent. Okay, we'll definitely put all the information as well on the article and on the site. I'll let you know when it's up. It should be coming up next week, Alan. So thanks so much. It was really great, and I look forward to talking to you again.
Same here. Pleasure.
Okay.
Take care.
You too. Bye-bye.
Bye.